Hello, everyone. This is Chapter 2, Financial Statement, Taxes and Cash Flow. The first part of the Chapter 2 is taxes. So we have two different types of the tax rate. The first one is called the marginal tax rate, and the second one is average tax rate. So what is the marginal tax rate? The marginal tax rate is the percent of tax paid on the next dollars earned. So for the marginal tax rate, this is the tax rate that the next additional dollars. So if you earn 100,000, for example, then the next dollar is 100,000, $1, right? So that's the tax rate you will use. So marginal tax rate is the tax rate that is applied to the next dollars, additional dollar. The second one is average tax rate. This total taxes paid divided by taxable income. So the numerator is just the taxes you paid, and the denominator is the all taxable income. So for example, if you consider a project that will increase taxable income by $1 million, which tax rate should you use in your analysis? So this is additional increased taxable income by 1 million, which means that this is related to the additional income. So because this is additional income, you have to use marginal tax rate. But from 2017, you don't have to worry about these differences, especially for the corporate, because after passing Tax Cut and Job Act of 2017, the federal corporate tax rate in the United States became a flat tax 21%. So both marginal and average tax rate are always 21% for the federal tax proposal. You still have the different tax law for state level, but at least the federal level, the corporate tax rate is always 21%. For individual tax rate is different. So individual tax rate has steps. So up to $9,525 at 10%, up to $38,712, $82,522, $157,524, and so on. And this amount is a single file. So if you are single, if you file tax single, then you use this table. If you file as a married joint filings, then you need to double these numbers. So examples, suppose you are single, so you use these tables, and personal taxable income is 100,000. What is your tax bill? What about average tax rate and marginal tax rate? So this is the Excel spreadsheet you can download. So we have Excel spreadsheet here. So if the income is 100,000, then you can calculate the tax amount it goes to. So this is the upper bound minus lower bounds. So that's the amount of the income that is applied to this tax rate times tax rate. The first $9,525, you pay 10% tax, which is $952.50. Second, now this difference is, so next dollars up to $38,700, 12%. Again, next one to $82,500, 22%, right? Now final table, we cannot just simply copy and paste because the income, the upper bound income is higher than your income. So it's basically just the income minus the low bounds times the tax rate. So if you add them up, that is the amount of taxes. So you pay $18,289.50. So the average tax rate is simply the total taxes divided by the taxable income. Your taxable income is 100,000. So 18.29% is average tax rate. Now, marginal tax rate is the tax rate that is applicable to the next dollars. Additional income, so $101, which is this range right here. So will be 24% marginal tax rate. Okay, so that's how to calculate total taxes, average tax rate, and marginal tax rate. We will have pop quiz here. So the pop quiz is the same. Suppose you are single and your personal tax income is $125,000. What is the tax bill? What is the average tax rate? What is the marginal tax rate? The way you solve is exactly the same. So again, go to the next spreadsheet, so pop quiz one. And first, so $9,200 is 10%, right? And same thing. And finally here, your income is 125,000, so it's below 157,500. So you can pay up to this part, 24%. And if you add them up, then you pay $24,289.50. So the average tax rate is total taxes divided by your income, so 19.43%. The marginal tax rate is the tax rate applicable to the $125,001, right, which is 24%. So again, that's how to calculate the total taxes, average tax rate, and marginal tax rate. Okay, so this is the end of the part one.